Hello everyone, in this daily video I will talk about gold and also about the US inflation. Maybe I will show you my opinion about gold and maybe how I want to trade gold around the US inflation data. Here is the disclaimer, please read it. Email support if you have questions, and follow us on Instagram. Please subscribe to our YouTube channel, and if you are not a VIP member, if you want to join us, of course, if you want to get all our VIP content, trades, trade management, webinars, tutorials, videos, market breakdowns, data, news, you can access the link posted right below this video, to join us. So about gold, but first of all, so today the US is to release its consumer price index, which is expected to register 0.4% growth in January. Core CPI 0.5% growth expected. Unemployment claims, this indicator is expected to drop in the last week, which could be good for the US dollar. But the US inflation data, the CPI, core CPI indicators are seen as high impact events, so you have to be careful. Most likely gold will register sharp movements around these economic figures. So technically here you can see that the price of gold reached these former highs, resistance levels, upside obstacles 1834.19, and right now it has slipped lower. Also it has reached the medium line of the ascending pitchfork. I've talked about something like this in my previous market breakdowns, analysis, webinars or something. I've told you here that after something like this, breakout, retest, so it has confirmed its breakout here above these levels, former highs here, and also very important above this inside sliding parallel line, the price of gold was expected to grow, to extend its rally, its upside movement, So right now also is in a confluence area here, and the intersection between the medium line with the 1834.19, very important. So earlier today I've talked about only for the VIPs, I've sent you guys Euro USD market breakdown. I've talked also about the dollar index, and I've talked about the dollar index. Dollar index remains under pressure after escaping from a minor channel, something like a flag there. So a bearish pattern on the dollar index technically. That's why if the dollar index will drop deeper and if the US dollar will depreciate versus its rivals, maybe the yellow metal, the price of gold, could extend its upside movement. So right now we are at resistance, but the bias remains bullish in my opinion despite temporary drops. So in my opinion, something like this technically, if the price will stay here, if it will maybe close, stabilize, consolidate above the medium line, if it will validate its breakout above 1834.19, most likely maybe the price of gold will resume its upside movement. And also we have a major downtrend line, at least towards that major downtrend line. Also after its failure here to approach to reach the former low, or to approach to reach to retest the uptrend line. So in the short term the bullish pressure is high, and the price of gold could resume its rally. Also don't forget that we could have high volatility, sharp movements, so we also could have something like a false breakout, with great separation. Maybe the price of gold will come back down to retest the immediate support levels, downside obstacles before will resume its upside movement. Also we can have something like this as well, something like strong drop, a pin bar here, something like this, something like a candle. So you have to be careful, because personally I'm expecting to see sharp movements in both directions before we'll decide direction, before we'll move in one direction, before we'll have a clear direction. So the bias is bullish. The US dollar remains sluggish, remains weak in the short term, and it remains to see how it will react here around the US inflation data. Of course, maybe a higher inflation could force the US dollar to appreciate in the short term, only because the traders will really expect the Fed to take action soon, and that's why maybe the price of gold could drop a little. But don't forget that gold is also used as an edge for inflation. Thank you guys, this is my analysis. Thank you, bye bye.